Welcome back, everybody. It's Alex. Bitcoin has been pumping recently, and we're going to discuss whether or not that's short-lived, if we're going lower, or if we're bouncing. We're going to look at some bearish signals and then tie that into kind of a macro zoomed-out version of where Bitcoin is in the current cycle. So let's hop right in. Obviously, if you've been keeping up with the markets, Bitcoin has had quite a pretty good 48 hours. Now we're just barely up on the 24, but a large bounce off of that kind of mid-19 range, which is very, very interesting to see and has a lot of people talking about whether or not we have actually bounced. Now, the first couple things I want to mention are some bearish indicators and why I think maybe in the short term we could be coming back below 20K. The first thing is that we've seen a lot of Bitcoin long showing up on exchanges, which is historically a warning sign for bullish liquidation. So essentially people thinking that they're ready to long Bitcoin, it's bounced, they get faked out and then liquidated on that next 5 to 10 to 20% decline after we have kind of this little bounce, right? So more often than not, that is a warning sign for negative price action. So if we look back here, we're comparing this to obviously the spike that we've seen recently. If we go back historically, every time we've seen somewhat of a large spike like this, it almost always leads to a price decrease in terms of price action for Bitcoin. We see that there. We also see that right here. So if you look right here, we're also seeing a decline in Bitcoin price. It just tends to be historically something that happens and something that, that I kind of just was paying attention to and found interesting. So we do have a bearish indicator on that side. I think we're seeing something similar in the Ethereum data as well. So right now we're seeing that Ethereum supply on exchanges has risen to its highest ratio in 6 months. We are up 13.8% on this price retracement since January 3rd. So looking at that, typically that's a bearish indicator as well. Now, not always, right? But I think it's something that is definitely not just a random data point. 13.8% is quite a large increase over that period of time. So just something I also wanted to note. So we're seeing that both on the Bitcoin and Ethereum side in terms of exchange supply concerns, and typically on the Bitcoin side of that Bitcoin long volume on exchanges. Now, the other thing that I wanted to cover, and we try to cover this pretty often because it tends to be a good kind of gauge of what institutions are doing. Now, obviously, it only covers, 8 or so primary institutions that invest in crypto right now. But what I really want to point out in this chart and what kind of has me not necessarily concerned, but definitely, raises my hair a little is that we're seeing almost a double down from institutions on shorting of Bitcoin. So we're seeing $51 million shorted of Bitcoin in terms of funds allocated to that, and that represents 77 million year to date. So there's actually more funds in terms of total volume shorting Bitcoin than have bought Bitcoin this year. And we haven't necessarily seen that pretty much all year. We actually had record outflows last week, but prior to that, we were seeing weekly inflows of 10, 15, 20 million dollars. And a lot of the times these hedge funds have a lot of teams and a lot of different, facets of knowledge and research. And so a lot of what I'm thinking is that they're probably allocating these funds to some other asset which they see has gotten beaten down more or has more upside. This kind of tells me that they're seeing something that says Bitcoin might go lower in the short term, and then they'll maybe be a little bit more nimble and allocate those funds after we do go lower and buy back in. So these people are really, really focused and really looking at what's happening. And if they're moving their money to short Bitcoin, I tend to lean their way as they know more than me. So that's just something that I wanted to point out. I think that's very, very interesting that we're seeing that, especially since institutions historically this year have been doubling down on Bitcoin. We're now actually seeing that reverse, and especially on the Ethereum side, right? Negative 450 million, so 450 million divested from Ethereum via these institutions. We're seeing a lot of outflow in terms of net year to date. So something to keep track of. Now let's think about an actual timeline. So this article compiles a lot of opinions from VCs that are involved in crypto, as well as particular crypto companies, so like payment companies like Uphold. And it kind of aggregates some great insights in terms of what people think and where people think we're going. So here's a quote talking about how we wobbled aimlessly on a little bit of volume around that $19,000 mark. And some indicators actually point to that 12 to 15K mark. And, funny enough, that's basically the, range that we talked about in some of our previous videos about how Bitcoin really is going to struggle to get above this 22K mark at that 200 moving average, and then likely get rejected and come back and play between that 12 to 15K mark, because 12, 13K marks that 80% decline that we typically see in a Bitcoin bear market. So really interesting to see, some of these VCs and hedge firms kind of echoing that sentiment. Now let's get into what actually could happen here in terms of timing. So this is Tom Lavero. He's a general partner at a capital firm. He's a board observer for Coinbase. He knows what he's talking about. He's basically saying 2023 will be mostly flattened down until indifference sets in. So he's saying this will signal a long-awaited spring thaw. He said, adding that he expects macro conditions to improve in the second half of 2023. And he gets more specific here. He talks about the characteristics of the bottom and why we're not quite there. So he says the bottom will come not during this current fear and loathing phase, but later after indifference sets in. So basically when people lose interest in crypto. This is when crypto is no longer making headlines and tourists have left. That process will take many months. So that's why he's kind of more so almost throwing 2022 aside and saying, 2023, maybe the second half is where we start to see, some semblance of a return to the upside and maybe come out of the bear market. So it's just really interesting to see, these folks in their timeline. They're looking at 2023, maybe into 2024 as the next time that we see, some serious movement to the upside. But given that we've kind of covered, somewhat bearish news up to this point, I do want to kind of zoom out and for these next couple minutes, just talk about why Bitcoin right now, historically speaking, is extremely undervalued. So here we have the 200-week moving average, and 9 times out of 10, when Bitcoin falls below this, it has been a good time to buy. So we can see here, obviously you'd get this huge run up. We can see here, this is the 2020 COVID crash. Obviously you get this huge run up. And typically when Bitcoin is, overvalued, you're going to be way above that 200-day moving average. And in this particular, 200-week moving average. And in this particular chart, it's a heat map. So anytime you see something, in the yellow, green, red area, so like up here, typically it's overvalued and a time to sell Bitcoin. Whenever you see it in kind of this cold color, so this is percentage, all it does is percentage increase above the 200-week moving average. When you see it here in this kind of blue color, typically that tends to be the best time to buy Bitcoin. And if you look at where we're at now, we're in that zone and we're well below the 200-week moving average. So if you're a long-term investor and you don't really care if we drop another 10%, you don't care if we drop 12, to 12 or 15K, and you know that you can afford to hold the Bitcoin for a while, it is a fantastic time to get in on this asset. And I think we've seen, Michael Saylor talk about that. We've seen a lot of, Kevin O'Leary, a lot of these other guys talk about how, historically speaking, if you're looking at a 5 to 10 year horizon, you're not going to get much of a better time to buy Bitcoin. Now, that being said, we can absolutely go lower, whether it's 15, 17, 12K, anything's really on the table. But that's just something to keep in mind in terms of zooming out and taking a, more longer view to this. And to kind of complement this 200-week moving average, I also want to break down some of this super cycle methodology. So, we talk about cycles all the time, almost ad nauseum in crypto, but I think that it's important to actually be realistic and take a look at where we're currently at. If we were to say, okay, let's put this in reference to previous cycles. So obviously you can see, we have a, crazy bull run to the top of a cycle. You see that here, not quite here, and then here as well. But what I want you to notice is that, we got rejected, just up here, right into that kind of green area of the bull super cycle phase. And now we've kind of dropped down, slowly into this accumulation box. And historically, obviously, you already can see from the graph, historically, this is a great time to purchase Bitcoin. Now, it doesn't mean, for example, this was a great time to buy Bitcoin, but you still fell, right? So the whole idea is like, we can't time the bottom. That's kind of what this comes down to. But historically speaking, it's still a pretty decent time to buy Bitcoin. But the other thing I want to make very, very clear is that the timeline is very, very uncertain, right? So if you can see here, we just barely dropped down into this, red accumulation zone where we're almost, max bear, max fear. And you can see here, I mean, it takes us months, if not years, to get back up even in this kind of white space before we hit that local top at the top of the super cycle, right? So I think frame of mind, you really need to be willing to say, hey, even though I know it's a good time to buy Bitcoin now, I may not see return on this investment for years. And that's kind of what these other hedge funds were echoing too in their sentiment, right? They said 2023 maybe in the second half, 2024 probably looks like a time for it to actually start roaring back. And, significantly enough, that also basically correlates with the next Bitcoin halving event. So it could get really, really interesting. I think the next, super cycle run will be somewhere in 2024. I think things will start to mellow out late 2023 based on what a lot of people are saying. And I think that makes sense with the, Fed raising interest rates. But I don't think, for example, that we should be expecting this bounce that we've been seeing in the last few days to kind of be our full-on rally bounce and then, see us break through 33K. Like, I don't think that's going to happen. I think what could happen very easily, actually, is we see a lot of retail investors get overexcited, think that they're missing the boat to get in on Bitcoin. They buy it up. And then, you have intelligent investors watching this 200 moving average. And I think what you're going to see is a rejection off of here, potentially if we go higher, and then back down into this kind of purple box where I think most people expect us to return to, between that 17 and 12K range before we eventually return higher, right? And that's kind of echoed in this super cycle graph. So just wanted to set expectations for all you guys. Wanted to give you guys some intel in terms of what we're doing with this most recent bounce. I think it's short-lived in my opinion. I think long-term we're doing okay, but short-term we'll probably see some more pain. Let me know what else you want me to cover, and thanks so much for watching. Bye-bye.